Hello and happy Thursday. We've reached the end of another week. I'm not quite sure how. It's the third week, almost the last week in July. And here we are, and just kind of going to touch on same sort of thing this week. We've got the whole band back together after a couple weeks of travel and things like that. Just in time for in a couple weeks, Karl and I will head out and we'll have to skip again. But lots has happened over the last week, lots of developments. We've had more in the way of conversations, I think, about some cash market developments. We've obviously worked our way into the end of July or close to the end of July. And so we've got lots of yield conversations going on. Harvest is still working its way towards the finish in Brazil, Safrinha harvest, and before we know it, it'll be U.S. harvest and planting, first crop planting or spring in South America. So this week, wanted to touch on just update on what we've talked about or been talking about here for the past few weeks. And so, Eduardo, I'm just going to kick right in. We last week, one of the things that we had discussed was weaker currency, the tariffs with the U.S. and Brazil, and what it was doing to the real and what that was doing, for the farmer. And so kind of update us. Farmer selling obviously picked up in a big way last week. Fill us in on what's going on in cash, what you saw for farmer selling, and then kind of did the market absorb it, or have we found that point where we've refilled your pipeline?
Uh, yeah. Last week was a very strong farmer selling for both beans and corn. 4 million tons for soybean old crop and 1.5 million for new crop, and corn more than 2 million tons. For corn, it was the most the strongest week this season. And the reason was the flat price rose for 4 real per bag, 30 cents per bushel, around that, in 2 weeks. So in the middle of the harvest of the big, very big monster. But I can see, of course, we have a lot of corn, a lot of chats about the yields are very high, record high, but in the end we didn't have any kind of problem, serious problem in terms of the flow, and the flat price rose around 4 up to 7 real per bag in 2 weeks. So for me, it doesn't seems a this monster safrinha. Or the other point would be the domestic consumption. She's trying to uh, to let the prices keep falling. But of course, even with this very strong farmer selling last week, we didn't have any kind of um, turn a to a lower basis or lower flat price. And Brazil, the replacement cost in Brazil keeps moving up. It's more expensive than the last year. In the last year, by the estimates, we have 20 million tons more suffering this year comparing to the last year. But we are more expensive. And the last year at the same date, CBOT was September 402, and the FX was very close to we have now. It was 5.6 real per dollar. So everything is the same, but basis and replacement this year is more expensive than last year.
I'm confused. Is that okay? Can I say that? Can I say that I am confused? I mean,
All of us are confused.
I mean, I feel like I get it. Like I get that the slower harvest pace and things like that. I always say cash grain, it oozes, it doesn't move, so it always takes way longer than you think, but we're 60% harvested at this point or close to it,
Yeah,
right?
yeah, it's a third, the final third of the
We
harvest.
should be seeing basis. under pressure by now. Like that you,
For sure.
what are you seeing, when it comes to like piles? Are there a lot of piles, or do we have mountains of corn being stored everywhere? Is that more of what it is? Or, is it just being withheld off the market at this point? Is that kind of your thought? Or I mean, what is it?
First of all, farmer selling is not that in percentage should be higher than now, but farmers are doing a very good job in terms of dictating the rhythm. And the domestic market is all the guys are buying, including the exporters. And a new thing is the rail operators, they are giving discount for September, October, up to December for the next 4 months. The rates are much 20% lower compared to the first semester. So because of that, I think tradings will take the opportunity to lock in this lower rate. But the other thing is the take or pays. They will increase the commitment. Then we see now is a short squeeze, the physical short squeeze because of the slow uh, harvest, and logistic short squeeze because we have more take or pays to fulfill, and then they have to buy whatever the price is.
And Eduardo, in Brazil right now, are you seeing like all this trade uncertainty affecting the local companies, or is it more of business as usual? Like, is any of that spilling over into this?
The uncertainty between the US and Brazil.
Yeah, just into the local ag markets. Are you seeing that at all?
No, no. Till now, we didn't have any kind of serious. Of course, we have the fear of this left uh, party doing some kind of Venezuela did in the beginning of the hell, let's call this. They did the same recipe. So, but in the end, well, I can't see anything different from trading standpoint.
I'm still confused. I will be probably for a while. I mean, I obviously will know eventually as the year progresses, like how it flows and where you see the pickup and all of that. But let's talk about soybeans because soybeans saw a similar sort of absorption, right? You had the biggest soybean week of soybean sales since April. Not huge compared to peak harvest farmer selling or anything like that, but still large. In the market, China soaked it all up, basically, right? I mean, what are you seeing on the soybean side of things, as we work our way into August here?
The farmer selling is below the last year in percentage. It's around 72%. The last year 78%, and the average is around that 78 up to 80% up to the end of July. uh, so farmers, they are doing a great job in terms of dictating the rhythm, and the point is the 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 stronger farmer sell in terms of months, for example April and now July, it's not related to prices. Flat price this year is very stable in real per bag. The variation was less than 10%, which is so farmers are not the feeling is why I'm going to sell more if I can't increase my average. So they are selling because of the other reasons. For example, space, cash, quality. Quality is important, and because of the yields are growing, and oil content is growing too. So the quality is a very big concern. Then, so Brazil is selling, China is absorbing all of that. For example, last week, we had 45 vessels traded. Was big because only Brazil, because we didn't have any from Argentina. So China crushers there are very concerned about this situation. If the tariff depend to reduce the tariff depends on the Xi Jinping and Trump meeting, which could be in the end of October. And October is 3 months away, so they have to keep October, November, December in Brazil, and they are doing that. So they can't sleep in terms of if we have offers, they to buy. So it's very steady. The basis in Brazil in the interior and the flat price is moving very slow, but is moving upwards.
Any other things that you think are important to point out that you're watching when it comes to the market and what is happening in Brazil in particular?
You mean the farmer selling or overall?
Overall, just anything that you're seeing in cash movement that has you, just has your attention.
Um, Two things. One is the quality north of Brazil. It's very tough to find beans. For example, Mato Grosso, Goiás, and Mapitobá. So 60% of the production and 80% of corridors in terms of exports. So it's very tough to find good beans. I mean quality. It's good for our crushers because they can give some discount and increase the crushing margin, but it's very difficult for trading guys. So trading companies, then they have to move south, and it's more difficult to buy from Paraná, Rio Grande do Sul, other places where we have cooperatives, and cooperatives in the south, they give some benefits for producers. They are not like in the north of Brazil. They try to they push farmers to fix and sell the beans up to the end of July, for example. South, we don't have this situation. So basis in Brazil is going to will go going to move up because of the lack of quality, and China keep buying from Brazil, and that's the point. And if you compare Brazil and the US, the difference is increasing. So other buyers, non-China, they should jump to the US.
It's going to be interesting to watch. I mean, I've said for a while, we've said for a while, like balance sheets and grain flows are not the same thing, or how grain flows and some of these other factors at play. And so, for the next 5 months, basically, Brazil has what they have for supply. They have a finite supply with potential quality. In the US, we'll see what it looks like. Now, Nick, and we can
Just
come back.
Angie,
Yeah,
just if I
Carl, go
could,
ahead. I was just gonna ask. You look like you had something you were thinking about. Go ahead.
well, I always do.
I know.
Eduardo, I got a question, a little bit off here, but the safrinha harvest is delayed, correct?
Yep.
Will that impact the start of the Brazilian soybean planting? Because don't you guys have to have a certain time span that land has to sit idle? Or am I wrong?
No, it's we are going to start planting beans in the last half of September. For example, Paraná and
Right.
Mato Grosso. So till then, and then we are going to finish the harvest. The point is the logistics. If, for example, Paraná, we have a lot of corn here, and the farmer selling Paraná is very slow, lower than the average. And here in the south of Brazil, we didn't have ethanol plants like Mato Grosso, Goiás, and other places. So bases here is not good like the north. Then cooperatives, they have a big problem when you look to Jan and Feb, because we have wheat here we still have a lot of soybean to sell, the big safrinha and wheat crop that is coming. So when you get in January, in February, and then we have new crop, soybean new crop, and then they have to sell or move November, December, they have to move corn. And then we have the possibility, for example, Paranaguá and San Francisco ports, we have to pay attention to the corn lineup. If that grows too fast, and then this corn lineup could, you know, make kind of delay the soybean program.
Okay.
We had the same situation in 2023, and then we have a rain season down the south. Then so the efficiency of the ports, for example, Paranaguá, goes down very fast. And because of that, we can see China suffering because of lack of beans, like this year, and they are not buying anything from the West. So could be a very big mess for Chinese soybean meal supply. So makes sense to think China need not will buy, but they need to buy something from the West because the risk is too big. In terms of logistic, yeah, we can see this kind of situation.
Okay. Thank you.
Okay.
Nick, let's bounce down, kind of talking about China and soybean meal and some of what we're seeing here. We did have China make another purchase. Eduardo, you can chime in on this too, of course. China made another purchase of soybean meal out of Argentina. Just meal direct, which is something that is of interest. We talked about it about a month ago of, kind of being a new move, and, maybe potentially a sign of things to come, maybe, I don't know. So let's talk about that. What's happening in Argentina now, Nick? What are we seeing, when it comes to competitiveness with meal, and some of these other things, and obviously now, point of interest is the almost complete lack of farmer selling since the export tax holiday was kind of done away with, or at least that's what it seems like. So kind of fill us in on what's shaking in Argentina at this point.
Yeah. So this second cargo, 30,000. So this weekend, Miele is going to make some announcements. It's La Rural. It's the big ag expo. And I think about the 15th, so 10 days ago, he came out and hinted that this was coming. So the rumors are it's going to primarily target small businesses, less than 2 million revenue, with something like 50% off on the withholdings, some kind of linked dollar bonds, fertilizer imports, favorability on like Social Security for new hires, and they have to. There's a couple things they have to do. One is they need to get this business into the white market. So much of the business over the last few years was in the black market and was essentially, currency plays, etc. So I think they'll try to do a lot of that. And the other thing is they need to give these farmers something. I'll write something out tomorrow. Everywhere in the world, the farmer deals with this uncertainty of weather and prices and pests. But in Argentina, they deal with the uncertainty of like how much does their government hate them that year. And so, I think they need to give that back because right now they have this we keep talking about like an unholy trinity of high effective rates, a strong currency, and high taxes. So, having said that, you'll get an announcement. Otherwise, yeah, farmer selling's really dried up, and I think the crusher should have enough beans through July into August, but the government, from a revenue standpoint, needs to do something. So, we should get what they're advertising as a grand announcement, coming Saturday. So we'll see. Otherwise, I mean, everyone's basically in a wait and see mode. I think sunflower is the only crop that probably be picking up areas at current prices, and and probably has the best outlook. I don't, they'll should have new record acres, crush new record amounts. But I think you need to give the industry something here, a show of good faith on these export taxes. But it's just a question of what'll be the threshold and who all it'll apply to.
Kind of an interesting point, talking about the year ahead. What are we looking at margin wise, Eduardo? You too, when it comes to South America, it's not, it's winter time, or we're gonna be making planting decisions in the next 8 weeks, really, right? Yeah, 8 weeks or so, 6 to 8 weeks. I'm like, how many weeks is it until September? September, October time frame, right, is really when you're looking. What is farmer sentiment? What are your thoughts on margin and, what the South American farmer is thinking, for the year ahead?
It was better for sure because of the fertilizers, and the flat price of beans are not that different. But the fertilizer, for example, phosphorus increased, and potash. Most part of the farmers that didn't buy yet, they are waiting for a miracle, something. For example, China is kind of in some export restrictions and limits, so we can see a lower input costs, but I don't think so we are going to see in the time enough because farmers in Brazil, they need to buy and receive the fertilizers, for example, for beans up to August and September. So we have only 2 months. In the end, if we not so good margin, they will hold forever for the next year. So the farmer selling the next year will be like this year, not so strong enough to depress the basis. So that's the idea. And the big doubt is about the safrinha, because the safrinha, the current prices for the next year, and the urea, which is very expensive, and have to buy more than 40%, then the farmers are waiting. So we have some farmers talking about a reduction in terms of acreage. I doubt that, because we didn't have any option, good option. For example, cotton last year in 2023 was good, in 2024 was not so good, and now it's worse than the last 2 years. So because of that, I think, lack of options, maybe farmers invest less than this year. But in terms of acreage, it's the same. We are going to see an increase for the soybean and safrinha.
Yeah, and I think, in Argentina, talked about like a month and a half ago, corn would have been the winner. Domestic demand, your industries like cattle, dairy, they're starting at a very low base relative, but they're profitable. I think it all comes down to export taxes. You probably have to use a similar base case to this year, if not, at these prices, high currency, high cost, the double deductions on fertilizer they're talking about. These things, they're good for keeping the acres. They're not great for the government balance sheet because they're propping up the currency every week. So something's got to give. You're not going to carry this current status quo for the next 8 months. And so they're going to have to provide some incentive. And it's going to have to be these small producers and ultimately investors. So, but today, sunflower is the only one that is going to increase. So, but it's got to change. They just can't continue this way. And again, I think you guys, like, we put out a thing basically calling it's time to start looking at where you get long and what you're long, and just ags, commodities. This US debasement is going to pick up speed here, and on these commodities in particular, it just raises the price floor. from a
Mhm.
cost of production standpoint.
I just see here uh the sales for China.
They
It's not.
corrected it to South Korea. Yeah,
Yeah.
you gotta love it. You gotta love
Oh yeah, man. So Trump cut the budget. So the result is
it. Oh, Nick, kind of on what you're saying, because I do think, the China sale like caught people, well, the incorrect China sale, but I think the fact that South Korea is still getting business from the US should be something that we talk about. We're not talking like, yeah, we're disappointed it wasn't China, but it's South Korea buying at a time that Brazil's supposed to be eating our lunch. And so
Yeah.
I do think, Nick, what you're talking about, it makes sense. Kind of, do we have this sort of, do we have an underestimation of demand potentially underlying in a lot of these domestic markets that we're really not recognizing that could be
You
absorbing
got,
some of it? Like either
you
that or
got,
we have less production, right? Like there are two
so,
answers when it comes down to
well,
like to a
there's
certain
a couple.
extent.
So like there's a couple things. Like number one, this uncertainty they're creating is going to force people to carry more stocks. Like full
Oh,
stop, like that's just going to happen. Look what the ag guys don't
your
pay
only
attention.
hedge, right?
Like
Against
copper.
inflation,
Yeah,
everything.
like look what's going on in copper.
Yep.
Like I'm not sure who the US thinks they're punishing. And ultimately, like, yeah, I guess you're going to produce these American producers, but the real issue, you go and look at these policies side by side, is like it would take you 10 years to bring on a copper mine, let alone the investment in what it takes in the refining. It's just like rare earths. Like you could theoretically mine them, you couldn't refine them, and you don't have the power to do all. So, I just think from the standpoint, people got to carry more stocks. They're going to have to start to extend buy out further. Your buyers, we've been talking for a year plus, how hand to mouth they are.
We've gone way back to hand to mouth. Yep.
And some of these, like it's like Russia today. We were promised that war was over. It doesn't seem like it's getting
Well,
any.
it's not over. No.
And if no, and if anything, Russia's going to be a much less reliable, especially like with like the sabotaging going on. We're kind of back into that. So, I think there's the risk of better demand. People are going to have to carry more stocks. You're going to be buying from alternative origins. I've sat on a global soybean desk where you coordinate everything. That is not just a overnight like switch.
Right?
Um,
Yeah.
inside these commercials, let alone outside them. So, and then again, I think this debasement, I think the ag community is starting to come around the importance of the weak dollar. But what I don't think they fully grasp yet is like this whole cost of production rising and this impact on commodities, because, the government is, this Genius Act has embedded stuff where it wants these stable coins not necessarily tied to, say, like a Bitcoin, because it's restricted by the amount. So they still want like a fiat, a financially repressive component to how they're going to be able to manipulate how much they pay in interest, right? So the easiest thing for the government to do is try to bring down the interest costs, but they're only going to do that by kind of breaking the cost of capital, which has historically been this kind of two relative to 10-year spread. So I think there's a lot of parts there that start to make business execution and stocks and uncertainty bigger. And from that standpoint, and on top of the fact that these commodities just aren't going to like to stay down with this cost of production conversation for very long.
They can't. I mean, we've said this before. It's unsustainable. If you can buy it cheaper on the board, then you can produce it around the world, because that's where we're at now. We're not just talking the US is below the cost of production. Everyone is below the cost of production, basically, around the world from a farmer's.
And take a look at Argentina. So you brought up the meal sales. The total revenue, top of my head, ag exports, plus fiscal, probably 25 billion bucks for Argentina to sort of get through this election, keep the currency, crush inflation over the next 6 months, kind of accomplish its goals, right? But at the end of the day, what it's trying to do is bring all the investors back, and they also have to solve the YPF situation, which is, whatever. But to bring these investors in, but ultimately, like, they're going to sell it to China. Like stuff isn't going to the US. And, and the US taxpayer is probably going to wear a lot of that risk. And so, China has a strategic interest here, even if it has to realign its buying programs at the expense of some of its crushers to solidify this relationship, knowing where the supplies are coming from. And the cheap, the more the US does this with copper, the cheaper those copper investments are going to be for them. So the commodity landscape, and this was, I think we put out two pieces on trade, like none of this is good for US ag. And it's, and I don't think it's good for the supply situation, in we're kind of friendly in the face of like really good global weather, which you wouldn't normally find us kind of wanting to get friendly when, most of the guys have, cried wolf 7 times now on weather problems that just really aren't there. So yeah, I think it's is the demand going to be the one kind of 2020-esque where we look back and we say, they just didn't stop buying? Or is it the fact that nobody's just willing to offer cash, at prices that make sense, and everything starts to creep higher? The palm chart looks great, above 4,300, it's going to be a big breakout. Cotton chart looks fantastic. You can't really sell beans here. If you're a meal bear, it's because you're an oil bull. The only, the reason you don't want to buy wheat is because corn's so cheap, and everything, but there's not really much you're looking at saying, man, I'd sell that, other than, the specs who trade strategies that, are relatively agnostic to price from our perspective until it turns. And some of them probably have already.
Oh, it catches them.
Yeah.
It's a
So
sign that you have to change, basically,
yeah. So
at this point. No, I think it's all interesting. And we haven't even discussed, and we're creeping up on 30 minutes, so we'll work to wrap it up here. But we didn't even discuss, and I don't really want to in depth at this point. I feel like it's a conversation that really it has value in 3 weeks or 4 weeks or whatever. But I am hearing a lot, and I know it's easy to poo-poo or easy to ignore or push off right now about the pollination, the poor pollination. And it's not tassel, like this isn't a tassel story at all. I think we have to watch too, just kind of on that, what you're saying when it comes to creeping, is the idea, the market itself right now appears to be pricing in a 185, 187 style yield, you could say. Immediately after the USDA report came out 2 weeks ago, in my inbox, it was everyone talking about, well, with a 185 yield, almost immediately, like that's just where we've kind of wrapped our mind around, because we have these weather derived models, we have these, crop condition derived models and things of that nature. And so we obviously have to be watching that. But I just really, for me, when it comes to kind of some of the yield conversation and things, you remember the August report is farmer survey driven, not based on crop conditions or, weather plays a role, obviously, vegetation indices and things like that. But I kind of want to throw out there that we're still going to be heavily reliant upon how the farmer views their crop. And in my conversations right now, there's a lot more variability on the production side than what we heard about a year ago. And you could say, oh, it's because the farmer sentiment or whatever, but price is basically where it was. A year ago, farmers had far more on hand than what they do right now. It's going to be interesting to me over the next 3 to 4 weeks if we kind of come back to reality. A 181 crop, a 183 crop even is phenomenal, is huge. And I know, there's models, and I know there's this, and I know there's that, but I think it'll be interesting just to see where farmer surveys start landing more than models and things, because I think that's going to be more indicative of what the USDA number is going to say than anything else on that. And so if we do have demand creeping up, if we do have inflation coming into play, if we do have the farmer holding on tightly, for another little bit of time or whatever, it could get real interesting if we do take a haircut to production in a way. Or even 1 million or 2 acres. You have to remember, we had a very large amount of unplanted corn acres at the end of June, comparatively speaking, the last 6 years. So, Karl, go ahead. I could tell that you had a thought. Did you have a thought?
Um, talked to a contact in North Dakota yesterday, and this is something I think we need to really look at, through that area up there. That's where a lot of the USDA's, our extra acres came from, is the Dakotas up in that area. Talked to a guy yesterday, an analyst or a contact. I had two of them actually. One drove from Fargo, North Dakota to Minot, so basically across the entire state. And the corn crop is planted and it looks great, but it's waist high because it had to get replanted. So you look at it and yeah, the crop looks great, but it's, you know, in North Dakota, if your corn is only waist high in July, end of July, you're gonna have problems getting that to mature. There's problems with this crop. There's problems, not big ones and not widespread, but there's enough small ones that I do feel we're chipping away at this yield pretty quick.
One thing is, whatever the USDA says, like, I don't think the crop's going to feel very big, right? And, look at Eduardo from third week of April until second week of June, we probably added 12 million tons to safrinha. You're
right.
talking
It doesn't feel like it at all.
400 million bushels of corn, and it didn't feel like anything, right? And so, like, I think it's really hard to have a yield problem here if you got good I states, and especially like with Illinois. Like, Illinois just, if that's, if you're going to come in 3% bigger, it's just going to be tough. Having said that, I'm not sure 183.2, 183.6 feels very big at the end of the day. Probably doesn't.
I don't,
So,
yeah, and I think the market's probably
still-
3 or 4 bushel above that right now. If you were to ask the majority of trade, and maybe I'm wrong, and we don't need to spend a ton of time debating. I hate debating yields in July and August anyway, just because. But I do think that's a good point, especially because we're selling into a hole. Like this year, we're harvesting into a hole. It's a lot tighter from an availability standpoint across the U.S. than, I mean, you had 2 harvests back to back last year.
And theoretically, you've had margins in everything, right? So your demand's probably been a bit better. China looks great. We took Russia to 82, so that's gonna cut a little. Romania probably didn't have the acres. Europe's gonna, 61 on corn, not great. But you don't have any real weather problems. Australia looks great. They're gonna get rains here relative. So, but nothing, it's not gonna feel very big, I don't think. And so we'll see. Like, but I think that's just kind of one of the takeaways is unless you get like a real blowout, which I'm not sure how, it's not going to feel very big.
I agree with that. All right. To wrap it up for the week, let us give our final thoughts, which we kind of did, but we're gonna anyway. We're gonna go around the room and give the things that you're paying attention to or what you want to throw out to the audience. Eduardo, we're gonna start with you. What is it that what is your final thought that you want to leave folks with today?
2 things. One is corn. For example, yesterday we had a trade for Brazil, Santos, for September, last half. And the level was record high. I don't remember to see close to 130 over CBOT. So it's very, very expensive. So Brazil remain a very expensive. And this week we had 7 parables sold to South Korea, and all of them sold through PNW. And the difference of the indications of other tradings that indicate prices from South America, the difference is around 35 up to 38 cents per bushel, comparing PNW in South America. So it's huge. Then I think it's very difficult to see the Gulf and South America following the PNW. And then I talked with a broker in the South Korea today, and they think they will increase the tenders or decrease the time length between the tenders to keep buying from the PNW, because it's a very good opportunity to increase the coverage because it's too cheap, and they and everybody thinks it's not going to be like this, so that this discount comparing PNW and the South America or Gulf. So that's the first point. So the US is the most the cheapest region to Asia right now. The other thing is Iran is buying in Brazil, and they pay 30 cents over the all of the other destinations. So why you should sell to South Korea if you can sell to Iran and collect 30 cents per bushel more than the other destinations. So Iran depends on the program, nobody knows, but the program this year is large, is the one of the largest for the beginning in 5 years. Don't know why. Maybe war, I don't know. And the other thing is the soybean meal are sold this cargo. And the point is, this time, the second one, it was for a state company. It's a game changer, because if we have more, we have the execution of these two cargos, and it's going, if this is good, and then we can see more and more soybean meal trades to China for state companies, for example. It's not good for the soybean meal in Dalian. It's not good for the margins around in China for crushers. Man, it's a big mess and big distortions. The soybean meal is very cheap, and because we have 11 million tons more of crush, if you sum Argentina, Brazil, and the US, from October to May, we have 11 million tons more of crush, and the next year will be more than that. What we are going to do with all this soybean meal and DDG, which is doesn't make sense to use DDG if you have a high pro,
I'm gonna burn it
lower,
for energy.
cheaper
the way we're going.
per protein point than the other meals. So big distortions. That's the point.
All important things to be paying attention to. That's I was on Agri Talk yesterday with Chip Flory, and we were talking about meal for a second, and I was like, we're gonna have to create something, or you know, I don't know. Eventually, it maybe I have no idea. Does oil just have to get that much more expensive comparatively speaking? But then obviously it's amazing. I think we just have to figure out how to turn it into electricity or something at this point, because we don't have enough electricity for our data centers. So maybe we just need meal powered data centers at the rate we're going. I have no idea. I'm not a scientist. Karl, your thoughts, and then Nick, you. We'll call it a week. But Mr. Setzer, what are you paying attention to?
Watching China a little bit here. China's ag minister is taking control of the nation's hog herd, basically. They've given the hog feeders in China a chance to cut back on their inventory. In the end of the second quarter, we came out and China had 424 million hogs and 40 million plus sows on feed yet. And I think that's why we're seeing a little bit of pressure here. Not only that, they're taking these hogs up to ridiculous weights. I mean, 325 pound hogs coming in. We're going to see a streamlining of the industry over there. And I do think that's playing into China's forward booking of meal right now. I mean, they're going to, like we said, they're going to need meal, but I do think they're calculating how much they have. And the ag minister did say that they're going to scale back on meal usage. So Basically, they're trying to bring their hog industry into the 21st century. And I do think that's causing some delays in their purchases, but they'll step in here pretty quick, I feel.
Good one.
Nick, your turn.
Real quick on the China theme. I don't know if you guys saw, they made an announcement on the Tibet Dam, about 3 times the size of the Three Gorges. If you actually look into like what their infrastructure planning was 10 years ago, it's actually quite a bit smaller. And so there is a lot of talk about they're getting very conscious of the perception of their industries. So Karl, to what you're saying, China's worth watching here on that front. As far to as kind of this migration to more direct stimulus. And again, I think we're not really going to know what's going on there until, the markets are, 8% into their moves. The other thing is the RMB digital side is actually quite interesting. So just keep an eye on China. I think but I think just mid-July we'll look back as one of those inflection points where you had, nonsensical bad math guesstimates, I guess we'll call them that, from, we have the same industry problem in ag that we have in politics. So, sentiment wise, it kind of makes sense that we made a low. August is when these deals are supposed to come in. There's not going to be much in them for ag. We've sort of, in that sense, we've forced a lot of this, what Eduardo was pointing out, uneconomical trade flows. We're sending things 30 cents more expensive one direction, selling from the wrong origin in the other. That will catch up. So I think ultimately we'll look back at this as kind of being the peak of this uncertainty and the time when you wanted to make decisions and go from there. So, and that's one of the reasons we're going to get friendly is looking at, kind of some of the 2020 similarities, which, back then we nailed pretty well. Like it's the time of the year when the crop size should matter and it really doesn't. And some of this price action is starting to, and at the end of the day, there's not a lot of things in the world that are cheap right now other than ag commodities. And so here we sit.
Yeah, I did not catch 2020. I had been lulled into a false sense of complacency because every day I had read we had way too much with no demand, and basically kind of just stopped paying attention to what was going on around the world. Which is why now you will hear me harp on it so much. Like, how you have two things that you can do when you've made a mistake in trading. You can learn from it and build on it and never, ever, ever, ever let it happen again. Or you can just keep doing it. I feel like there's basically like we have, where we're just kind of ignoring the flow. And I like I said, I was on AgriTalk yesterday, and that was one of the things I brought up with Chip is you should not have an inverted cash market in Brazil when people are talking about 150 million metric ton corn crop, right? Now, we both know that, or we've talked about it before, where the 150 is probably exceptionally lofty, comparatively speaking. But when it comes down to it, cash is like gravity, in my opinion. And so when it comes to grain flow, when it comes to what the cash market is doing, that speaks volumes. And I agree with your sentiment, Nick, in the sense of like it. I think we front ran, a lot of the really, really, really negative info. We talked about seasonals being pulled forward and some of these other things. And so, yeah, to me, I feel like we're on the cusp of yield estimates coming back to earth. Now, that doesn't mean we don't see a 183 or something like that. But as recently as 7 days ago, I was told by someone else, and I respect this person, like, do not take this as me speaking negatively of what they're putting together, but their model showed 191.
Can I
And so
comment
it's
real quick?
Oh,
yes, please.
191.
Detrending
You are so
technology,
bearish, Angie.
detrending technology out of something is so mathematically flawed that let's just throw that aside. Like the entire, Like if you actually look at what Jensen's put out with like the idea is that the acceleration has picked up, the Moore's law has actually accelerated. It's just so flawed to put that out that way that we probably should just throw it out.
Right? Immediately. It's an Olympic average. We're gonna toss the big one, but and so that's the thing. And Carl and I have talked about this too, and then I'll stop talking. But we've all been doing this for a very long time. And when we started, or at least when I started, someone like Doug Jackson at FC Stone or whatever, would present ranges. It wasn't this is where we're at, this is what we are. It was, we're basically between here and here. We're looking at, if demand is here or there. I feel like so many times now we assert things that are probably really, really, really tainted with opinion too. So we have to be careful. But anyway, it's off subject. Yes, one more.
Yeah, last one. Like when we put out models, we're gonna put one out with the group on Monday. We have assuming normal weather, and then we have assuming the current trend forward, specifically because over time that narrows. We almost very rarely comment on demand because like we're not in demand. And that's just the one thing I'd say is like another super flawed nature of exactly what you're saying. What people are putting out is far more around the social media click phenomenon, which again, you saw this morning when Reuters automatically reproduces an article that if anybody in ag would have questioned before putting out there, the AI going for the clicks automatically does it. The nature of this, to your point, to like that clickbait is people putting stuff out for that effect, not because it's useful or helpful.
It's something you have to be really careful of, which is where I get even more frustrated because it's hard enough for farmers to be able to make their way through the maze of information and what matters and what doesn't. And, what was important a year ago sometimes is not important now, and like just a lot of that. And so it makes it that much harder to have to also wade through your clickbait too on top of everything else. So that's why, segue into wrapping this up. That's why we hope you jump on here. When it comes down to it, in the end, it's grain flows, it's what the cash market is doing, it's whether or not the world end user can access the supplies they need when they need them at the values they thought they would be able to get them bought at. And all of that is what's really important as to what happens down the road. And so with that, we appreciate it. If you guys have any questions, let us know. And we'll be back next week.
Thanks.
Okay,